It was another rough day for the Indian markets, folks. A sea of red for the third day in a row. So, what's really driving this downward slide and what could be next? We're going to break it all down for you.
So let's just get right to it. The big headline number for the Sensex, a drop of nearly 346 points. Yep, that's the kind of number that definitely gets your attention.
And look, this wasn't just some random one-off bad day. Today's loss makes it 3 straight sessions of declines. It's pretty clear a downward trend is set in for the week.
All right, let's dig into the final numbers and see exactly where things landed when the closing bell rang.
Okay, so you can see the Sensex closed at 84,695. That's that nearly 346-point drop we talked about. And the Nifty 50, well, it wasn't spared either, dipping just over 100 points to close below that really important 25,950 level.
And you know, this wasn't just a problem for the big-name stocks. The selling was felt pretty much everywhere. Think of it this way. For every 3 stocks that went up, almost 6 went down. That really tells you how negative the mood was, and that pressure pulled the mid-cap and small-cap stocks right down with it.
So we know the what. The market was down across the board. But now for the million-dollar question, why? What was really pushing things lower today?
So what was actually behind all this selling? Well, let's peel back the layers and see what was going on.
It really wasn't just one thing. It was more like a perfect storm of factors. You've got foreign funds continuing to pull money out, and everyone's kind of on edge about what's happening geopolitically. Plus, it's the end of the year, right? A lot of traders are on holiday, so the market is a bit thin, which means even small moves can feel bigger. Then you throw in a weaker rupee, and, of course, people just cashing in some profits after a good run. Put it all together, and yeah, you get a day like today.
Now, even when the whole market is down, there are always some interesting stories hiding in the details. You've got your winners and your losers. So let's see which sectors got hit the hardest and which ones actually managed to swim against the current.
And here's a little surprise for you. In a sea of red, the media sector was actually the lone bright spot, managing to climb about 0.75%. But on the flip side, the heavy hitters like IT and auto really took it on the chin, both dropping by almost a full percent.
And if we drill down to the specific companies, you see the same kind of split. You had some solid performers like Tata Steel and Tata Consumer Products holding their own. But then you have the big names like HCLTech, Adani Ports, and PowerGrid, and they were the ones really dragging the whole index down.
All right, so we've seen the numbers. Now what do the experts think? Let's dive into what the analysts are saying about the technical charts and the big picture strategy.
Now, this is really interesting. Look at this. You've got analysts from 3 different major firms, and they're all saying basically the same thing. They're all laser-focused on this crucial support zone for the Nifty, right around 25,800 to 25,850. That's the floor they're watching. If we break below that, well, that could signal more weaknesses on the way.
You might hear the pros talking about the Nifty slipping below its 20-day EMA. Sounds super technical, I know, but it's actually pretty simple. Just think of it as a short-term momentum line. When the market dips below it, it's just a little warning flag for traders that the recent upward push might be running out of steam.
And this quote from Geojit Investments really just nails the overall feeling right now. He's saying the market is, well, short on reasons to go up. There's no big news, no catalyst to get people excited. This points to what he calls a consolidation phase, which basically means the market might just tread water for a bit, moving sideways instead of making any big move.
Okay, so that's the story of today. But the big question is always, what's next? Let's talk about what we should all be keeping an eye on in the coming days.
So there are a few key things on the horizon. First, what's happening around the world? Global events are always a huge factor. Second, and this is a big one, we're about to head into Q3 earnings season. That's when we get a real report card on how Indian companies are doing. And third, everyone's still watching for more details on that U.S. trade agreement. Any news there could definitely shake things up.
Which really brings us to the final question, doesn't it? With the year wrapping up, is this 3-day slide just the market taking a well-deserved nap? Or is this a little tremor before a bigger shakeup in the new year? I guess time will tell. Thanks for breaking it all down with us.